Well, that's very encouraging, and I think it's encouraging for the Indian stock market as well. If we can create a $250 billion market cap company in India, I think we'll all benefit greatly from that. Ranu, as you look at investing activity, both early stage and somewhat later stage in terms of venture capital and private equity, do you find big differences in their approach? So what kind of company should go to venture capital? What kind of company should go to private equity as it's happening in India now?
I think we are seeing an interesting mix of investors today who are, for the right deals, willing to come down to a $6-7 million deal, and for some of the transactions willing to go up to a $150 million kind of a size. So it's an interesting case. For instance, we did a case of a related case of a pathology lab chain where a large investor actually, who typically doesn't go down to below $20-30 million, actually just put in $6-7 million. So there are those kind of aberrations. But if I were to just take a quick call on I think $3 million to $4 million transactions are typically being seen by the venture capital funds. It's also the stage of evolution on whether you have the second tier management, your product is ready, are you in some manner able to predict what your business is going to be like, do you have a pipeline of customers. Anything above $5 million, I think, is being seen by a lot of large private equity funds as well. Deals above $15-20 million are where the private equity funds really come in. So if the transaction size is more than 15 to 20 million, you can get the largest of the funds looking at you if you're an interesting case.
Julio, my next question is to you. You obviously have a very good perspective on valuations around the world. Ranu just talked about private equity players and other players investing in India. Do you think valuations in India are at peak levels? Would you put your dollar into an Indian company right now?
This is, I think, one of the things that, with some of the guys that have been traveling around all week, we've been sort of, asking that question of, is this, a bubble? What's the risk to the downside here if things were to unwind? Where do you see that, risk reward, if you will, in terms of chasing these things around? And I think from my side right now, definitely the answer is no, this is not a bubble. This is something that has very strong fundamental support. And if you actually look at the sort of classic definition, at the moment that we start using valuation metrics that don't make sense anymore, like eyeballs and click-throughs and things like that, we have a problem. But I don't think in this case we're anywhere near that, because there is growth, and it seems like it's, at least right now, it's sustainable. Obviously, if you get some slowing things along those lines, you'll see multiple contraction, and you could see some risk to the downside from that. But I think fundamentally the stories should be well intact. So to answer the question, I think you have to look at where the absolute return potential really is in terms of some of these names. So across the board, U.S. companies will offer return opportunities, typically because they're seeing good improvements from restructurings, et cetera. But do you have growth? Probably not. So you're going to get a different sort of approach in terms of what you're really going to focus on. Other things that you see in the U.S. that you're not going to find here. You have companies that generate significant free cash flow, pay out dividends, and those yields are important to certain investors who are looking for more of the income and looking for more of the yield as opposed to pure growth. So that's one issue. I think the other issue, as far as the Indian IT sort of sector itself, you're seeing, I think, a fairly significant dichotomy. You guys addressed it in terms of the winners and the losers, in terms of the separation that's happening. And that's becoming really important as far as the dynamic here is concerned, because I think it's forcing the investment community to really sort of move beyond the names that we all already know, and we know they're great companies and they're all doing really well, but really ask where the multiple expansion opportunities are. In some cases, you have even restructurings here in India that have to go run their course as well, and those types of names, which are sort of below the radar screen, are the ones that I think are going to be, the real alpha generators that investors are going to look for. So, it's a little bit of a hedged answer, I think, but, just to give you a sense in terms of what we're seeing and how we're feeling about the things is that, the absolute return situation is really what I think you're going to have to look for, and it's not always going to come from the most obvious places.
Mark and Rob, Julio thinks we are not in a bubble. Both of you lived through, I'm sure, Silicon Valley in the 98, 99.
I was there too.
So was Julio. In its heyday, you've just come back from Hyderabad and Bangalore. Does it feel like Silicon Valley in the bubble times?
I think that you have to remember that the bubble was not just about failure. The bubble was about incredible success, and that the success that we have today is a result of the bubble. Were there failures in the bubble? Absolutely. But when you look at it from a long-term perspective, more good came out of the bubble than bad. And hopefully we've learned some lessons from the bubble which we will carry through the next 5 and 10 years.
I'm still waiting for Cisco to come back to 60, though.
Yeah.
Well,
my 401k too.
I think that long term, this is not a bubble because there's a lot of excitement. There are going to be failures. There's no question. That's part of the process, and you just have to kind of accept that and go forward, knowing that the successes are going to outweigh those failures.
Yeah, the one observation that I would make is in the 11 years that I've been in the business, there's only 1 year that I can think of that venture capitalists haven't complained about valuations. And the other thing that I would say is that in 99 and 2000, for people that were in the industry, I think people did understand that there was inflated valuations underway. There was no way you could look at what you call discounted cash flow analysis, even with crazy outcome multiples, et cetera. And at least speaking for, I'd say, the global economy and what's going on in Silicon Valley, people wonder whether there's a bubble, but the reality is, at least in Silicon Valley, there are some extremely healthy private companies that people aren't aware of yet. As far as within India, I think that a lot of venture capitalists came over here expecting to be able to get really low valuations in companies, and what they're finding is, like any healthy economy, is that capital has a tendency to chase what the bankers like to call alpha returns, which are these outsized returns above the market. And I think a lot of that's gone away, and I think what you're finding is the realities of more efficient pricing mechanisms.
So we've got, I think, a pretty guarded view that it is, in fact, not a bubble yet. So if you're looking to put money in the market, go for it.
The timing, keep the timing in mind as well.
That's right. But switching now from the bubble valuations on the venture capital side, I'll ask Saurabh a question, which is really around the consolidation dynamics that we're seeing more on the capital markets. Saurabh, question to you, and then after that I'll throw it open to all of you, so you might want to start thinking about your questions. But the question to you, Saurabh, is this the pace of consolidation activity, M&A activity in India, fast enough? Is it too slow? Do you think, what is your view? Do you think something needs to happen, that there needs to be a catalyst, or are we doing fine as we are?
No, I think we're doing fine as we are. I mean, initially, I'd say 5 years ago, I would despair because it would be very hard with the mindsets of people at that time to really look at consolidation, because everybody thought they could just take their companies public.
That's a deal from his banker.
Just one sec, yeah. Everybody thought they could take their companies public. Everybody wanted to hold on to what they had. I think there's been a lot of maturing. So I would say today, if you look at M&A activity, it's gone up quite substantially. In terms of people we're talking to now, I think a lot more openness to looking at how value can be created. So I think I'm not uncomfortable with the pace at which it has moved.